Well, there are several items that we're going to spend significant amount of time on. And I think one of those is we've had a lot of clients who have been approached by promoters asking them to participate in programs that we want to make sure that all of our folks are educated about, to know whether or not these are legitimate, how they may be able to help their clients avoid getting into a situation that may be considered to be fraud by the IRS. So we're going to spend some time on those items. We're also going to spend some time looking at the sunset of 2025 with respect to the Tax Cuts and Jobs Act. And this is not going to just be, oh, here's what's expiring, here's what you need to know is expiring, but instead we are going to try to equip attendees with some planning strategies to say it is likely that come 2026 tax rates will be higher. Now, we don't know that for sure, but if Congress does nothing, that is what's going to happen. And so with that uncertainty, but also that likelihood that that is where we're headed, what are practical, pragmatic steps that we can take with clients to prepare them for that? And that is with respect to income tax primarily, but we also will be taking a look at estate and gift tax for any clients that we may need to refer on to somebody who's specialized in creating trusts or things that are going to help us avoid estate tax down the road.
Well, we still get questions about R&D credits. There's been some new language legislatively done that we don't get the full deductions for those as quickly as we did. And there's a lot of interest in the farm community about R&D credits. We'll spend quite a bit of time talking about that particular one. And I'd say the other hottest topic will be the Tax Cuts and Jobs Act from 2017. Many of those things expire in 2025. And we'll be thinking about how do we plan ahead for just the 2 years left under those rules. I think another interesting topic we'll spend time on is the net investment income tax credit. As farm asset values have increased in recent years and people are contemplating sales of those assets, it's important we revisit the rules that came about, more than a decade ago about this NIIT and when that 3.8% tax is applicable, and more importantly, when it's not subject to a taxpayer's liability.
Well, there's a lot going on right now, as everybody listening to this understands. We have commodity prices that are dropping. We've had a lot of disasters this year. Illinois has been faced with derechos and some unprecedented wind damage, things like that. And all of these items are incidents that impact the way that you handle your financial planning and your tax return filing. Keeping in mind that we may have some lower income tax years and we may need to avoid tax liability even though we have lower income. It's not necessarily true that just because our farm income drops, our tax liability goes down. So we're going to make sure that we help people think about tools that could make that possible. We're also going to try to help them understand the provisions in the tax code dealing with disaster, so that when we get those clients come in who have been hit hard with, maybe they had some farm buildings that they lost or crops that were destroyed, etc., that we can inform them and really educate them on how the tax code can either assist them in some ways or just make sure that they remain compliant.
Well, I think our farm clients right now, of course, we are nearing the end of harvest, and at the day of our seminar, harvest will be underway in some locations. So right now, I think people are interested in what's our crop going to really look like. Will we have high production? That looks like it could be the case. If that's true, that has a lot of tax planning implications, not only for the current, but the following tax year on what we do with a large crop followed by a low price. And with that combination, trying to multiply the best gross revenue that we can get. So I think now people are interested, how's the year going to wrap up from a production standpoint? From a tax standpoint, I think the longest term planning pieces are, what about the election cycle? What about the congressional intent? Will there be a continuing, an amending, or a cease of the current rules under TCJA. And if to what extent those change, that will be a lot of planning needs for our clients moving forward. And so that's why we think today's seminar in forward thinking thinks a lot about 2026 and years after that even.